Finovate showcases cutting-edge banking and financial technology through a global conference series featuring short-form demos and thought leadership. Now, the conversation continues on the Finovate Podcast.
Hi, everybody. Greg Palmer welcoming you to the Finovate Podcast. We are kicking off our series of talking to the Best of Show winners from Finovate Europe this year. We had a great event in London earlier in February, and there are 3 companies that took away trophies on the heels of that event. And joining us today, we have Savannah Price, the founder and CEO of Serene, who was one of them. Savannah, thank you so much for joining me today.
Thank you so much, Greg. It's great to be here.
So as anybody who follows the podcast knows, you can find all of the videos from previous events up at finovate.com/videos. You can see Serene's video up there. Savannah, for people who haven't had a chance to look at that video yet, can you start by giving us a little bit of background on yourself and Serene?
Of course. So Serene, we build behavioral intelligence for retail banks and consumer credit providers. And essentially what we do is we help them act early on risk. So what that really means is we help firms detect the earliest signals of financial stress, vulnerability, or even scam risk. And this is sort of 1 to 2 months before it actually shows up in traditional risk models. So yeah, we're kind of looking at credit risk, collections, and fraud. And we're all about finding behavioral patterns in transactional data and turning those into much more actionable and explainable insight. Yeah, as you said, recently won Best of Show at Finovate, and it's really exciting what's happening next and off the back of that show.
Yeah, no, that's excellent. Certainly well-deserved. And again, I would recommend anybody watching this take a look at that video. Before we jump into Serene itself, I'd like to start by digging into your background a little bit. Can you talk about how you decided that risk avoidance was something that you wanted to focus on?
Absolutely. So I think with any sort of startup experience, it's never a straight path to where you land up. So where we are sitting in the risk space, I think certainly for me, the backdrop, or at least the insight behind Serene, was not even in financial services. It was actually more out of personal experiences that I had with siblings who struggle with a range of different mental health challenges. And one of us, like our issues as a family, was very much around, it was always a crisis before we actually knew when things had started to spiral. And those crises tended to be something financial in nature. So whether it was kind of gambling addiction or getting severely over indebted and needing kind of the family members to bail my siblings out, it had quite a big financial impact, but also an emotional impact, not only on my siblings, but, the surrounding family. And while we were looking for these sort of early indicators or a way of actually preempting when that happened, the only thing that worked for us was looking at bank statements. And what we saw sort of 2 to 3 months before things had obviously gotten worse was we could see these changes in how and where my siblings are spending money. And for me, it kind of really felt like a light bulb moment, because all of a sudden I was like, wow, if you can tell such a rich picture of what's going on in someone's life, surely it's not unique to my family, and surely actually a lot of people, a lot of institutions could benefit from that earlier insight, particularly when it came to credit risk, arrears, churn, all the sort of, fraud, and all the things that we're looking at solving today. So that's a little bit of the background, and yeah, topsy-turvy journey, but very, very happy with where we've landed.
No, it's really fascinating. And I think the fact that you came there sort of organically really speaks to the level of information that exists in financial data. And this is something I think a lot of us in the industry take for granted. You have this data, but you don't always necessarily see the value of that data. So let's talk about Serene now a little deeper level. Obviously, you don't have to recreate your entire demo for us, but can you give us a quick overview of how Serene is able to kind of take that data and how you use it?
Yeah, of course. So for us, fundamentally, it's taking raw transactional data and turning it into something meaningful. So for us, it's we're analyzing these anonymized transactions and we're looking for behavioral patterns, whether it's around kind of erratic changes, big increase in the volume and frequency of spend, but then very much down to a category level as well. And what we do is we overlay these indicators to form a behavioral signature that something has changed or something has happened in someone's life. Once we have that indication, so for example, there might be a signature for caring responsibility, there might be a signature for relationship breakdown, there might be a signal for erratic income. But once we have those signals, it doesn't just stop there. What we really want to understand is, how is this impacting somebody's financial resilience and financial life? So we score that and then generate a predictive score, which essentially measures the propensity of, for example, defaulting on a loan or falling prey to a scam. And then once we kind of have that contextual insight, the next step for us is really around how do you actually operationalize that insight? And the demo that we gave at Finovate is kind of the next step to our engine, which is, adding an agentic layer on top of that insight to enable frontline support teams or operational teams to actually make sense of that insight, but also to serve customers better, to be a little bit more compassionate, to understand the right time, channel, and tone with which to engage that customer to deliver the best outcomes, both for them as well as for the firm.
Cool. There are a couple pieces here that I just want to unpack a little bit more deeply because it's so interesting. And again, it's easy to see why you were able to capture the attention of our audience so effectively here. And I think the first thing I'd like to do is just get a sense of, what types of behaviors that you're seeing. You had a couple of them, but I wonder if you can get a little more specific in the types of behaviors that you see that would be an indicator of future risk. Is there anything that kind of jumps immediately to mind as an example?
Yeah, there's a couple of really good examples. I think I mentioned one of them, which would be caring responsibility. So for us, when we're looking at the layered behavioral signals, what we'd be looking for is a gradual decrease in income as someone moves from full-time to part-time and ultimately to unemployment. But at the same time, we see an increase in grocery bill spend, an increase in utility bill spend, and some care-related expenditure around the fringes. So for us, that's kind of, okay, we know that there has been a change in circumstances relating to caring, and that's kind of the first step for us. Another quite interesting indicator, which we've actually found to be highly predictive, both of credit risk as well as fraud susceptibility, is loneliness. And this is usually quite a shocking one. I mean, people are usually like, how could you possibly derive loneliness from transactional data? And for us, that's kind of different changes in the patterns of your indoor versus your outdoor spend. For example, from a geolocation perspective, how remote are you located? Has there been a change? So it's very much that kind of behavioral patterns, but that for us is just the first step. Like two people could have exactly the same change in circumstances, but actually be at risk of completely different outcomes, or one person might be at risk, another might not. So it's very much around that nuanced understanding. And that's where we analyze the coping behaviors in terms of, much more financial metrics, but kind of looking at how is it impacting your financial well-being? Is it leading you towards missing payments? Are you canceling subscriptions? Are you reliant on more buy now, pay laters, for example, or even, shopping in, have you usually shopped mainstream stores, but all of a sudden you're on secondhand marketplaces? So all of these things actually piece together quite a solid picture, but we haven't found any single indicator to be predictive of harm or predictive of risk. It's the way in which they combine, which really makes a difference.
Yeah. When you say it like that, it sort of seems easy to kind of imagine how you can get this picture that you're talking about. Obviously, the next step, and one that you did a good job focusing on in your demo as well, was what do banks do? What can a financial institution do with this information in order to help out their customers and obviously help out themselves as well?
Yeah, absolutely. So if you think about it in a financial services context, it's like, when are firms actually taking action? So typically it would be in a consumer credit context, it would be after a customer misses a payment or they're starting to see some kind of pre-arrears indicators in a credit file. For us, what we're really trying to focus on is the timing. So how do we actually shift that timing upstream where the cost of getting it wrong or the cost of intervention is much lower for the institution, but the emotional weight of it for a consumer is a lot less. You're not kind of, burying your head in the sand. You're really open to kind of looking at and seeing and finding options that might support you. So a good example to make it a little bit more tangible and real. A lot of firms have policies in place that if a customer has experienced a bereavement, they will offer breathing space. But actually, if you've experienced a bereavement in your family, your bank is the last person you want to contact. And to be quite honest, making repayments on loans is probably very, very low on your priority list. What we've seen from kind of analyzing at this point 6 million customer data and kind of being able to look at that bereavement pattern, we typically see that it takes people about 3 months to emotionally recover from a bereavement event. But during that time, they've probably missed 3 months of repayments. They've had, their negative impacts their credit history negatively because it's had to be reported to the bureaus. Serene can surface this much earlier and essentially say to an organization, this customer is likely to miss a payment. We believe that you should automate a 3-month breathing space to give them the time and space to recover emotionally from this event that has happened in their life. But at the same time, why don't you post them to a company that offers grief counseling services and also takes over the administrative burden to manage that bereavement. So essentially what we're doing is we're finding the root cause of why things are escalating and going wrong. We're kind of treating that root cause, but also delivering a much more kind of compassionate experience from the firm, a better customer experience, but also protection for that customer, as well as financial protection for the firm of things kind of getting worse and escalating. So that would be kind of one example of the type of insights we surface, but also being able to provide that prompt. If you're engaged on a phone call with a customer, whether it's outbound or inbound, surfacing that context in real time in a way that's operational in terms of the tone, the promptings, how to structure a conversation, what sort of support offerings are available, but also what sort of forbearance or treatment measures can you viably take to get the best outcome for both.
You just touched on something that I think is also a really critical component here. The tone, the understanding the emotional side of what might be happening to somebody on the other end is really interesting as well. And I think that was one piece that really struck me too when I was watching the demo, was how you're able to kind of not only service these things, but also give the customer service rep examples of this is a way that you can say this in an emotionally supportive way. Can you talk to us a little bit more about that emotionally intelligent side of it? Because I think that's a really critical component as well.
Yeah, absolutely. I mean, look, I'm a very emotional person, and obviously the founding story behind this, it's so much more about the person at the end of the line and kind of understanding the impact. And I think that financial harm is emotional before it's financial. So I think one of the challenges that we touched on in a lot of the feedback that we got is, once again, it's a little bit of two-sided story. Like when it comes to vulnerable customers or when it comes to complex cases and being able to handle them, agents often feel very ill-equipped. Like what they often have is they have prompts and scripts that they have to follow, and it's quite process-driven. And that sort of breaks down when you're confronted with a customer who's obviously emotionally distressed. So I think the way in which you open up a conversation or start a conversation can really set the tone for the rest of the conversation. So for us, around timing and pacing of that conversation, take it slowly. Don't rush through it. Be a little bit empathetic in your responses, but also let's guide a good customer to a conversation and really try and understand that root cause. So I think there's that side of it. And actually on the flip side, and what you made me think of is there's a human agent, but also increasingly, particularly around contact centers, we are seeing agentic agents and LLMs coming to the fore. And that in a sense is also, it provides a bit more dynamism, but if you lack the context or the emotional context of a customer, how is that agent, that kind of AI agent, equipped to actually deal with these edge cases? Because we know that a lot of models are not trained to handle the extremes. So for us, kind of the dual purpose of, yes, it can be used to prompt human agents, but equally it could be one of the stacks or one of the agent systems within a broader system that can provide a little bit of that, temper the tone, maybe take them down a slightly alternate journey and provide a little bit more, like slow it down, basically.
Yeah, that's excellent. Again, this is one of those things where it seems like common sense when you say it, right? If you're a human being and you hear this, you think, oh, that's what we all should be doing. And it's such a departure from what we are doing in many cases. I'd like to switch gears a little bit because there's an interesting piece I noticed in your background that you had some experience working with the sandbox run by the Financial Conduct Authority. And this is something which I'm just curious to hear more about your experience there and how that sandbox helped you. This is something that I think we're seeing more and more of. So any information you can share about your experience there would be really interesting.
Yeah, absolutely. The sandbox for us was actually an amazing experience. So a little bit of background to that sandbox. It was kind of a collaboration with NVIDIA as well as with the UK FCA. And essentially it's kind of providing this controlled environment in which you can pressure test and test the edge cases and experiment with agentic tooling, but with the kind of a little bit of the design guidance and input and mentorship from the regulators. So there were quite a few sort of synthetic data sets available. We actually brought our own data set into the sandbox to kind of test with the different kind of AI tools. But I think for us, what was really great was, I think a lot in the industry is about, particularly with innovation and particularly with AI moving at the pace that it's moving, regulation is often seen as a barrier to growth or a barrier to innovation. And I think what the sandbox allowed is actually regulation became a design input and actually helped us to build. So we've sort of built from the bottom up with compliance in mind, particularly because we know that our clients are regulated institutions, and that kind of explainability, the testing of edge cases, that whole model governance piece is really, really important. And I think it's much easier to design it bottom up rather than kind of build a system and then try and fit it into a compliance framework or fit it into a governance framework. So I think that for us, we pretty much built out that entire agentic system, tested it, had regulatory input, and are now kind of testing, or the next step is to kind of test it in the real world with real clients. But it was just a safe space, just being able to get that instantaneous feedback, get that kind of the design principles built in. It's meant that we've been able to move a lot faster, and we have a lot more trust across the market. So it's great. We've used a couple of sandboxes, a Fintech sandbox, which is the US sandbox as well, around providing access to real world data sets with a bunch of partners. They're invaluable because data is such a commodity. It's quite hard to get, actually, if you're a fintech building, and even harder to test in a real world controlled environment.
Yeah, absolutely. I think this underscores the importance of it. And I think we're going to see more and more companies who are really looking at that sort of opportunity to be in a sandbox as a really critical step. So I think that's an interesting component, and obviously it was helpful for you all. So we have time for one more question here. And this one's really just sort of an open-ended one. Where do you see Serene going from here? Let's say that, over the course of the next 5 years, all of your wildest ambitions are realized. What does Serene look like? What does the market look like over the course of those 5 years?
Yeah, absolutely. So when I think about the vision for Serene, it is about becoming infrastructure, and kind of infrastructure in its purest form, but for financial care. So when I think about who are the market enablers, like the credit bureaus, the payment and network rails, the regulators, where I see Serene sitting is amongst those kind of core market enablers. But it's not so much around, the focus on product and rails and infrastructure. It's actually much more focus on the human and how you actually marry the more human side of finance and make that like a foundational principle in terms of upon which products are built, markets are built. So I think for us, it's that, and beyond financial services, even I think into any retail organization, how do we embed that human centricity at the core? And that's what we really want to do, is kind of shift the market. It's moving away from that human centricity in many ways, is how do we bring that back into the system?
Yeah, no, I think it's spot on, and I wish you all the best of luck. Congratulations on this step. And for our listeners, stay tuned for the next 2 weeks. We've got 2 more Best of Show winners to talk about. Again, all of the videos from Finovate Europe are up at finovate.com/videos. We've been talking to Savannah Price, Best of Show winning founder and CEO of Serene. Savannah, thank you so much again for your time.
Thank you so much.
Check out Finovate.com for information on Finovate's upcoming shows and to learn how you can get involved. The discount code Finovate Podcast will save you 20% on tickets to all of our events. And you can email us at info@finovate.com for information on sponsoring, speaking, or demoing. Thanks for listening.